All right, traders, I'm going to show you exactly how to identify key levels to be trading at and how to create a plan to trade the best setups at the best prices heading into the rest of this week. We're going to be doing an in-depth price action analysis on the SPY. This is going to show you how to identify the key levels, where to be buying call options, where to get in, where to set your max risk, where to set your price target, where to be short selling, where to be buying put options, where to get in, where to set your max risk, where to set your price targets. I'm going to walk you through this step by step. First things first, we're going to be explaining in terms of where we overall are in terms of the micro scalping market. I'm going to be going over the last analysis that I ended up giving on SPY, and then we're going to start creating and identifying the key levels and trading plans. Let's get straight into it. This is going to show you how to trade the best setups at the best prices. These are going to be trading opportunities that can easily get you in within Trader Society and make up the cost of Trader Society before you actually join the program. Let's get straight into it. So in terms of the SPY, what I want you to understand is, so this is the last analysis that I gave out on the SPY. Listen to what I had to say here, because this is going to be very important in terms of the upcoming next trading plan. This was the plan that I gave out before the SPY hit 386. The next day, SPY hit 386, and this is what I had to say a day before that. Listen to this very, very closely. If that's what were to happen, then 386.23 would be your next best level to try put options to short the SPY at 3. So 386.23, the gap to fill above right here would be the best level to short the SPY and buy the puts. I said that a day before and prepared you guys in advance. Look at what happened. SPY hit the top of this key resistance level. It filled the gap and then it sold off very, very hard. It was the exact top, the best level you could have possibly bought puts at this week. And then I also said, if it goes green to red and reacts as a resistance, play the puts there, which all the confirmations triggered, man. I gave you guys the best plan possible. And the same plan is coming up. So get ready, man. We're going to do this again. I posted many videos last year. I'm going to link them down below in the description for those of you new to this channel. This gap trading strategy will make you rich. The most powerful trading strategy that I'm using to consistently profit on the SPY. It's very simple, and it's the best trading strategy that you could be using with price action. So SPY filled the gap. Once it filled the gap, it formed this bearish doji right here, and it formed lower highs. It sold off very, very hard to fill this gap. Now, as you know, it had a gap close reversal, and then it came back down to fill the gap below. So what can happen is when SPY fills a gap, it can potentially have a reversal. You have to wait to see how it reacts. In that video, I also said, if SPY goes green to red, wait for it to spike back up to the previous closing price. If it forms a roof, it's bearish. If it forms a floor, it's bullish. So it went green to red, spiked back up, and you tell me, once it spiked back up, was it forming a roof? Was it forming resistance, or was it forming support? Well, if you look right here, bearish wick at the previous closing price, lower highs, lower highs. It's forming lower highs, it's forming a roof, and then it sells off and gets crushed. The put options went crazy. Look at what it did today, man. The strategy worked again today. Look at this. SPY had a gap up. It filled the gap at a lower level. For all these people who want to buy call options in a bull market, please use the strategy. Buy the dip at the gap fill level at the lower ends of the overall range of the channel towards heavy support. Do not try to buy these breakouts. Look at this. If you're trying to buy high, buy the breakout, massive downside potential. You're trying to predict something that is historically proven to be resistance. Look at where the win rate is, man. Who's the sucker? The person who's trying to hope and buy the top with very little upside potential and massive downside potential with a very poor win rate? Or the person who's shorting the SPY, buying puts at the key resistance with confirmations, consistently banking because history repeats itself, right? When history doesn't repeat itself, there's simply no confirmation of it repeating itself. It tends to work with a very, very extremely high win rate if you're using the confirmations. Put yourself in the right odds of the trade. If you're buying, buy the dip low at the key support level. If you're shorting, buy the resistance high, the puts, when they're low at the resistance into the gap close reversals. Look at this, man. SPY filled the gap. What do I tell you guys when the gap fills? So if SPY fills the gap and goes green to red, you have to wait until it spikes back up to the previous closing price. So right here, the SPY went green to red, wait for it to spike back up, and you tell me, did the SPY react the same way it did yesterday once it spiked back up from going green to red? It did not. It instantly had a breakout, and it had a pullback right here, and look at where the high of the pullback is. It's above the previous closing price. It's forming a floor. It's breaking out. It's forming a floor. It's doing the opposite of what it did yesterday when it filled the gap. It's having a reversal. And I called this out. I didn't play calls because I try to focus more on puts and resistance. That's my core strategy. But the strategy works both ways. And I clearly said, do not buy puts here. It's reacting bullish. It's forming a floor. It is not doing what it did yesterday. Yesterday, it went green to red when it filled the gap, and it formed a resistance level at the gap once it popped back up. Today, it ended up breaking out, formed higher support, continued to break out, formed higher support, continued to break out. Right before the massive breakout, more higher support. Bullish dojis, bullish candlesticks above the previous closing price. Gap close reversal. The put options got wrecked here. I was laughing at bears, man. I was laughing at bears. I didn't care that I was missing out because I didn't go long. I was laughing at these bears saying, man, if they just knew about gap close reversals, they wouldn't be short here. Why would you even want to short in the first place at oversold levels? One tip I'm going to give you is don't try to predict a support level cracking, and do not try to predict a breakout trying to break above resistance. Don't try to predict anything. Trade the channels. Play the puts at the key high end of the resistance with the gap fill levels. Play the calls at the key low end at the support levels, and use the confirmation. Don't just blindly trade at key levels. Use the confirmations. Don't try to predict breakouts, but you must be aware. If SPY is reacting bullish here, then let's not buy puts. Let's sit on the sidelines. Who wants to buy high? If it looks bullish and it looks like it's going to have a breakout, I don't want to buy high because it could fake out and it can have huge downside potential. I want to buy low with big upside potential. I want to short high with big downside potential. That's my style of trading. I have zero interest in buying breakouts, hoping for something that is historically proven to react as a resistance level. I would much rather just keep hitting puts at that level with confirmation, and I'll be right the vast majority of the time. And when I'm wrong, I will get stopped out very, very quickly for a small loss with an extremely high win rate. You tell me, do you want to be shorting and buying puts on all these rips, or do you want to try to go long and buy the breakouts, right? That's the analysis. That's the point that I wanted to make. Now, what is the update, right? What's the update? What's the trading plans, Will? So I want to explain to you in terms of where we're over on the market and what has been occurring. We're towards the higher end of the channel. We're towards the higher end of the channel, and the bulls showed up today, and they showed some true strength, right? They showed some true strength. They had a gap close reversal at a higher level, and ever since it had that gap close reversal, it kept on ripping back up to yesterday's highs, and they did try to close this strong. So, Will, what's the new key levels to be trading at? So here's the first level. Write this down. This is the level that can get you in Trader Society and make you back the cost of the entire program before you even join the program. So this is the level. It's going to happen at some point in time. Whenever it happens, right? So this is the best level to scalp put options on the SPY. I'm going to give you two levels. This is the one that's going to trigger first. 389.63, this gap to fill above right here. And then the higher one at 399.44, right? Those are the two best levels. I would play them both. Wait for bearish reaction, wait for bearish confirmation. What is the strategy behind this? So SPY has key support at $390 with about 20 points of upside potential. Do you see that? It's a key support level with nice upside potential. So when a key support level cracks, instead of it having nice upside potential, if it cracks, pops back up, reacts as a resistance, then it's confirmed bearish, it has big downside potential. So if the SPY can rip back up quickly to the previous support level on the macro daily level, this is a macro daily level. So the macro trend on the SPY is bearish, and this is the previous macro support where it had that nice sell-off once it cracked the support. So the point is, once it spikes back up to fill this gap at that 389.63 to 390 previous macro support, the macro trend is going to kick in, and it's going to tell the micro trend to start flipping bearish. So if the micro trend is bullish, SPY fills the gap, it starts having a reversal like it did today and starts pumping up, and it starts to rise up and break out and then fill this gap. The macro trend is going to tell the micro trend to start having a small pullback because it's at previous support. And if the macro trend's bearish, the previous macro support reacts as a resistance, then the SPY starts to sell off. That's the strategy. Key support, macro trend kicking into the micro trend, having a small reversal, and the gap close reversal. There's a gap to fill at 389.63. Same exact thing that has been occurring. SPY filled this gap right here, had a reversal. SPY filled this gap right here, have a reversal. It's getting you in at the top for the puts, best lowest entry for the puts possible, and it's getting you in at the bottom for the calls, lowest entry possible. Imagine not having that strategy. And I've been teaching this strategy for years. For years, we're consistently using it and consistently profiting on the SPY. You can use it on stocks as well, but I trade the SPY because the SPY is the most lucrative option to be trading. It's the most lucrative option chain to be trading, right? So that's what I want you to understand. The bulls are trying their best. They had a gap close reversal. They're trying to break out. So that's the plan for puts. Those are the best level for puts. Now, I have one more key level. This isn't the best level, but this is another level I have of interest, right? This is another level. So I gave you the best trading plan for puts. Set the price alerts. Whenever it happens, it happens. You know what to do. Wait for the roof, wait for the bearish confirmation, start scalping the puts, get in, get out. If it drops like $1, $2, start locking in gains on like same day expirations or whatever expiration you want to do, right? These are meant to be scalps. Now, with that being said, in terms of our key make it or break it level for tomorrow, we're going to say 383.76, the previous closing price. So there's a lot of resistance towards this 384. If I see the SPY react as a resistance level at 383.76, I'm going to do a quick scalp on puts. If it reacts bullish, I'm not going to do anything. If they can break above 384 and turn that into a hard support level, the SPY is going to start to fly and it's going to try to break out. I will not do anything, but I will respect the bulls and not play the puts, right? I want to get the puts at the best resistance levels and when it's reacting bearish. So my next trading plan would be, along with what I just said, I gave you the best ones, 383.76 is micro make or break. If it breaks down, goes green to red, pops back up, forms a roof, forms resistance, I will look to do a quick scalp on put options with very little risk. I'll risk like 50 cents, 60 cents move against me in terms of the SPY, not risking a lot, right? And in terms of what's the price target on that? The price target would be $282.70 to $282. Those are the overall price targets. Very quick scalps. So that's it, man. I'm keeping it super simple. Those are my plans for puts. Now, in terms of calls, I don't like buying breakouts. I don't like buying tops. Obviously, if it breaks above 384, forms a floor, it's going to go bullish, try to start to fill the gap. I don't care, right? I'm trading the best setups at the best prices. I'm looking to make like 5 to 10 trades a week. I'm compounding the count. That's all I need. And I'm putting myself in the best position to succeed as possible. These trades that I'm lining up for you have the highest risk to reward ratio possible. These are the best levels you could be possibly buying calls at for micro scalping and possibly be short selling for puts, right? So in terms of calls, this would be your best level for calls. If this just flash crashes later into this week or, into next week or whenever this is going to happen, 376.66. There's a gap to fill below. It's at the low end of the support channel. Look for a gap close reversal at 376.66. Another best level for calls is right here. There's a gap to fill at 374.13. So Will, what are the best levels to be trading at heading into this week and also heading into next week? So our new level that has developed is the previous closing price, 383.76. If it reacts as a resistance, I'm going to scalp a put because it's towards the higher upper middle of the channel. Just understand, bulls have shown some true strength. If it reacts as support and breaks out, it's going to go super bullish, start to fill the gap. If that happens, then I will not be looking to play puts, right? Just understand where we are in the market because the bulls are trying to gain some micro control and they're really trying to push back up to this previous macro support to fill the gap, then look for a bearish little micro reversal, right? So 383.76, make it or break it, upper level of resistance, right? I'm looking for a green to red move if it happens, and then it spikes back, forms a roof like I did in my last 2 live trading examples. You'll see the confirmations I look for. Then I just make a quick scalp on puts. Is this a special significant level in terms of where we are in the chart with everything going down? It's not, man. SPY keeps trying to pump and it keeps trying to fill this gap, but it also keeps trying to fill this gap. It's a decent level, but it's not the best, but I'm interested in it. 383.76 is our new decent make or break level. Not interested in buying high, obviously, with calls, right? In terms of calls, 376.66 and 374.13. In terms of puts, 389.63 and 399.40, right? New key levels are added when big moves occur, so I will keep you updated on the new key levels, but that is it, man. I gave you the best levels possible to trading at. So the question is, are you going to set your price alerts? Are you going to prepare to trade the best setups at the best prices? Are you going to use the candlesticks, use confirmations to determine, okay, this is the level where I was interested in buying puts. Is it forming a roof? Is it forming lower highs? Is it forming bearish confirmations? Okay, it's confirmed. Let me try to get in as close as possible to that key level on the puts. Let me not risk a lot and have, you know, a tight mental stop loss if it starts breaking above our key level. If it can't work at our key levels that I'm giving you, then it's just not going to work, and you have to get stopped out very, very quickly. You don't want to fight the trend, right? So that's the game plan. And then in terms of profit targets, I'm doing same day expirations at the money strikes, the strike price closest to the out of money one, at the money strike, barely in the or barely in the money. Depends where the stock price is. And I'm looking for a quick 1 to 2 point drop. It depends, but I gave you the overall direction. I gave you the overall price targets. If I'm doing puts at 389.44, my target's at like 387. If I'm doing puts at 384, my target's at like 382.70 to 382, right around there. I'm not going to be aiming a lot at the lower levels. I'll be aiming for a little bit more at the much higher and competent best levels possible. In terms of calls, if I'm buying calls at 376.66, I'll look for like 378. If I'm buying calls at 374, I'll look for more. I'll look for like 376 plus, right? So that's the game, man. We're scalping, we're trading the best setups at the best prices. That's going to wrap up today's video lesson. If you do want to be a part of Trader Society, we're going to be trading live every single day on stream with these alerts, giving you the updated price action analysis and updated plans along within the chat. There's so much more to it. It's going to be the first link down below in the description if you do want to join. I will see you guys tomorrow live at Market Open.